Yo, what's going on, guys? It's T-Trades from C Investments over here. I want to do a quick breakdown on this crazy market that's been happening lately. And with that being said, I hope you enjoy this video. I'll give a quick market analysis on what I'm seeing and what I feel like a lot of traders are not talking about. This is not at all financial advice. This is completely my opinion. With that being said, I want to break down a couple things that I feel like should be talked about that are not being talked about. One of those things right now is the possibility of a pullback further down, right? We have been seeing bullish conditions on an hourly time frame, but we have not necessarily gotten that extreme confirmation bias that the pullback is here to get bought, right? We are seeing some institutions like JP Morgan talk about how their traders have been buying this dip, so that's good. That's a good sign, right? That's showing us that smart money is buying this, but you're not seeing it on the chart, right? You're not seeing enough momentum or volume to really say, hey, like we're about to break down of these previous bearish weeks, I guess it's been 2, I think. So because of that, I'm not completely sold on this hourly, retracement. I mean, we did have the hourly bias of, we're going bullish, but on your daily, you have a straight bias of bearish price action. So it's kind of, it has a divergent, right? You're seeing daily showing you bearish and you're seeing the hourly showing you bullish. So you want to be able to identify, okay, if the daily is showing me a bearish bias and the hourly is showing me a bullish bias, where can I make the most money in the market, and how could I stay away from risk? The easiest way to answer that is by having an open mind, by realizing that this week you can make money in either direction. You can make money going up and you can make money going down, and no direction has too much of an advantage besides the bears right now, right? We've been really measuring risk with the premium Discord, and I'm going to explain what we've been doing in order to stay green this week. We took one really good trade on NVIDIA. I wouldn't say really good trade, decent trade, right? We got a 25% return, but we were able to grab that 25% and stretch it out for the rest of this week. What do I mean by that? We've had 3 more trades that didn't go exactly as planned, so we got stopped out at a negative 5% stop on all those 3 trades. So you're down negative 15 to 25% when you're up between 10 to 5% on the week, right? That's not in my overall account. That's just in my earnings in percentage. Because of that, I want to make clear that that's the type of trading and that's the type of risk you have to have this week. You do have a higher probability of getting stopped out. Reason being is because you don't want to risk a lot, right? You want to make sure that if you get in, you're either on a perfect entry, right? Or you're realizing that the market conditions aren't the conditions that you normally see. So you're not risking that probability of not having that good return that you want to get, right? With that being said, I want to break down kind of the possibility of the push lower, and I want to explain that there hasn't been enough talk about this on social media. There hasn't been enough talk about this on certain gurus, right? There's been too many people just talking about buy, and I want to give you guys the unbiased approach of what the chart's showing us. So let's break it down real fast. I'm only going to break down the SPY, and I'm only going to explain where it could head and how it could do it. So if you're interested on the SPY, this video is going to be good for you. Okay, right off the bat, we have Monday, right? The big scare, right? That we're falling into a recession. Those were the big headlines. What were the 3 most important news events or articles that came out that we need to know? One was that Japan fell under a bear market, right? That's very important to know. 2 was that war overseas was increasing. So we need to understand, okay, that puts us at a higher probability of entering war. And 3 is that Jerome in the last conference was talking about lowering interest rates coming the September meeting if everything plays out well. Because of this pullback, I don't know if he's still doing that. I don't know if it's still in the Fed's mind. I can't read their mind, so I can't tell you that, right? The same way that I don't have a crystal ball that I'm going to be able to explain where the market is going to go perfectly, right? That's impossible. You're here to make money off reaction, not expectations and predictions, because you're not a genie, right? So those are the 3 news events that we need to understand and break down. That's what happened. That's what happened Monday, and it looks like Monday we bought them, right? That dip was bought on Monday. So dip was bought on Monday, right? We showed bullish confirmation because we respected these lows and we broke structure to the upside and created higher highs, right? We came back down and did that same thing today. And then the market opened and it was a big sell-off on SPY, right? That sell-off caused us to break structure down here, right? So I want you guys to keep in mind kind of that's what we saw today, right? So was that a manipulated move to the upside in order to stop out sellers, right? Was that a manipulated move in order to stop out buyers? We don't know, because liquidity could get swept at these lows down here. My fault. Let me clear this out. Liquidity could get swept at these lows right here for a bigger push up, or liquidity could be chasing the previous lows at 508. And if we chase those previous lows, are we going to have a bearish market? Are we going to jump into that bearish market? Like I said, it's too early to tell. Right off definition, you need to have a bigger pullback. You need to have at least a 20% pullback to completely confirm bear market. And I want to make one thing clear, we're halfway there. We're halfway there. We're at a 10% pullback. So if we have another 10% pullback to give us a 20% pullback, you're going to go red on the year on SPY, and that's not going to look good for investors. And you're entering that bear market, right? Like right off the bat, that bear market could come if that's what's happening. What's going to give us early signs of that, and how can we protect our positions, and how can we profit off that, right? How can we make some money on the downside right off the bat? Tomorrow, the only type of setup that I'm seeing, if you want to play it a bit riskier, is that a lot of these stocks are rejecting off some nice FVJs. Microsoft had a good pullback. Nvidia had a big pullback today, right? -5% on the day. You had SMCI not show any strength at all. Earnings came out horrible for it, right? So it was a surprise in earnings and a surprise in revenue. That's not good. But the big one that I wanted to talk about, where is it? It was Meta, I believe so. Yeah, Meta was reacting off an hourly FVJ, and it broke structure down to the downside, right? I liked it for the upside because it was one of the most bullish stocks coming out of Monday. Meta and Apple have been the most bullish stocks coming out of Monday, as along with AMD as well, right? So a lot of these stocks are starting to pull back, and you're seeing weakness in them. So there is opportunity to push this further down. Right off the bat, if we do what we did today, if we swing low in aftermarket and gap up in pre-market and push higher and break this, then you're bullish, right? Because you'd break hourly structure. This could be a sweep. You have to have all this in mind. So that's why it's very important this week to have an open mind on where the market could go, and understand that your daily trend is bearish. So if you could find a setup that is bearish daily trend and bearish hourly trend, you're most likely going to make some good profit off that trade, right? Because there isn't a divergent anymore. But there is a divergent when you're looking at bullish trend and bearish trend on the hourly. How could you start to signify what's going on, or get some notification of what's happening? Well, we're going to break down the monthly time frame, and we're going to explain where we could head. But real quick, before I get off the hourly time frame, I want to measure one thing on SPY. I'm going to jump to the 1 minute time frame, and I want to show you guys why the push down makes a little bit more sense right now. So if you measure the push down from today, it was a 3% push, meaning that we have to have a 3% push back up in order to break highs, right? And give you that hourly bias that price wants to push higher. But from those previous lows to where we're trading at right now, it's only a 1.5% move down, meaning that it literally has to do twice that to go up and half of that to go down. So you do have to keep that in mind. And I mean, if your trend is bearish, right? If you're an options trader, if you're a day trader, if your trend's bearish on the daily, if your trend's bearish on the hourly, and you have a push there, you have targets to seek at, because you have liquidity pools down at 508, I think it is, right? You have a projected move, and you can enter the trade with a decent trade plan. So that would benefit you, right? If we trade up, that would benefit the shareholders, because it's going to confirm that this is the dip that is to buy, and we're showing it with signs of confirmation on the hourly. Right off the bat, though, let's jump on the monthly time frame real quick, and I want to explain what would tell me that the bears are here strongly, and how would I prepare to this bear market before it comes, if it was to come, right? I want to see the break of monthly lows. So if we see a strong break of 494.05, I am only looking at shorts, and I'm bearish. And that is only 12% of the move, right? Meaning we have 8% of the move down to capitalize on that. I like that risk to reward because I got that 12% of the move confirmation and I have that 20% move to chase further down. That's how you want to look at the market. You want to wait for that confirmation. There is no way that you were shorting the market up here and said that you perfectly got this 20% retracement if the bear market was to come, right? There isn't enough confirmation. Remember, you don't trade off emotions, you don't trade off hypotheticals, you don't trade off feelings, you trade off reaction and what you know. And in this case, if we see reaction break out of some previous lows, if we see reaction sweep some lows, right, you're either going to get confirmation that we could push higher or that we could push lower. But the most important thing this week is to measure that risk. That risk is going to be the biggest thing to measure this week. Keep the stops tight, keep your positions reduced, and have in mind the bigger picture. The bigger picture right now is that the pullback is a possibility, and if you want to see the push up, you want to see confirmation on the hourly time frame. I know the name of this video is how to catch the big market move, and that's how you prepare for it. Because right now you need to prepare like Smart Money's doing. Smart Money's letting all these retail traders burn themselves out right now so that they could lose a bunch of accounts. A lot of money can go in, and that's just going to start recycling so Smart Money could have enough liquidity to enter these big positions. Stay liquid, have an open mind, and identify these specific structure points on where you can capitalize on them. Don't trade with emotion. Don't make a million trades this week. Honestly, it's probably one of those weeks where if you're a beginner trader, it's going to make sense to step away. Have an unbiased point of view in the market, because right now there's too much of a bias on TJR said this other trader said this, it's time to buy, it's time to buy. You got to realize a lot of those influencers X, Y, and Z might be very heavy in their position sizes. So when they see a significant pullback like this, and if they have an audience to influence the market to benefit them, guess what they're most likely going to do, right? They're going to want to benefit themselves, bro, no matter what you tell me. So I'm here to give you the unbiased truth on where this could happen, because I don't see anyone talking about the possibilities of the push down. I want to send this to you guys. I know it's kind of late. I'm probably going to be able to send this around midnight. Once I do, though, I want you guys to really have a chance to watch this before the market opens so that you could have that perspective. The premium chat on the Discord, I will be talking about what I'm looking for, especially on SPY, how we can capitalize off this move, and the setups that we can wait for. There's a lot of momentum building up for that momentum move that we want to the upside or to the downside, right? There's a lot of things building up. You want to capitalize on them right now. Stay liquid, reduce risk, and keep a tight stop loss. If you can end this week profitable on the week, congrats. Like we're doing right now with the premium Discord, we've had 3 trades that didn't go as planned. 2 of them did end up going as planned after we got stopped, but we had 1 trade that was good this week. They gave us about a 25% return, and all the other 3 ones gave us a negative 5%. You want to play with those margins this week. You want to be able to measure that risk so that you don't get wiped out, so you don't end up red, so that you're not giving your money to the market, and when it's time for these big moves, you can capitalize on them and make profits in them. That's how you stay profitable on a long-term scale, and that's how you're going to make money in the market. This week, if this week was to end today, right, if this was Friday, I would end between 10 to 5% up on the week with 1 trade on NVIDIA and 3 losses, right? That's the risk to reward you want to put yourself in the market, and that's how you're going to make money. With that being said, this is the game plan. This is what you want to think about, and this is the perspective you want to see in the market. You want to aim for the bigger time frame move, and that is that there's a possibility for the pullback. If you're holding shares, don't freak out. If you come back down here and you break strong, guess what? Close the positions and buy at a cheaper discount. Worst case scenario, you lost 1-2%. Not the biggest thing. Is this an opportunity of a lifetime? Absolutely, because we are pulling back. So if we have this pullback and then 2 consecutive years of the bull run like we did the past 2 years, you're going to see some big profits, and that's what you want to aim for. Aim for those bigger goals. Stop trying to get rich overnight and stop trying to find momentum in one trade. Diversitize, move yourself. You know, that's the best advice I could tell you guys, man. Again, this isn't financial advice, it's all my opinion, but just trust me, listen. With that being said, I hope you guys took this unbiased opinion and were able to create an understanding of why this could possibly push down lower, what would confirm a bear market, right? The 20% move down, what could confirm it on the monthly time frame, and what could confirm on it right now in these hourly structures. This is going to be a market that's going to manipulate you tough. So I want to wish you guys luck tomorrow. I hope this video helped. I hope this was educational. If you guys have any questions, join the free Discord down below. shoot me in free trading chat and we could chop it up, talk about any questions you got going on. I'll be posting a lot of educational things on there. I hope you guys benefited from this, and I really hope you guys watch this before the market opens tomorrow. With that being said, C Trades is out. Have a great night, and I'll catch you on the next one.